If you have bad credit and you think getting a loan in the USA is impossible, then you're not alone. Millions of people struggle with low credit scores, missed payments, or financial mistakes from the past. And the worst part is, once your credit score drops, it feels like every bank door is closed for you. But here's the truth most people don't realize. Having bad credit does not mean you're out of options. In fact, in 2026, there are multiple ways you can still get approved for a loan, even if your credit score is far from perfect. You just need to understand how the system works and how to position yourself correctly. First, you need to understand why lenders reject people with bad credit. It's not personal. It's all about risk. When your credit score is low, lenders assume that you might not repay the loan on time. That's why they either reject your application or offer very high interest rates. But the key here is this. If you can reduce their risk in any way, your chances of approval instantly improve. One of the most effective ways to do this is by applying for a secured loan. This means you provide some kind of asset as collateral. It could be your car, your savings, or even property. When you put something valuable on the line, the lender feels more secure, because even if you fail to repay, they can recover their money. This simple shift can turn a rejection into an approval. Another powerful strategy is using a cosigner. This is someone with a strong credit score who agrees to back your loan. It could be a family member or a close friend. When a lender sees a cosigner with good financial history, they are much more willing to approve the loan because the risk is shared. For many people with bad credit, this is one of the fastest ways to get approved. Now let's talk about something that's changing the game completely. Online lenders. Traditional banks are strict, and they rely heavily on credit scores. But modern fintech companies look beyond just numbers. They analyze your banking activity, your income flow, your spending habits, and overall financial behavior. This means even if your credit score is low, you still have a chance if your financial activity shows stability. You might also want to consider credit unions. These are smaller financial institutions that often offer more flexible terms compared to big banks. They are known for working with individuals who have less than perfect credit. If you build a relationship with a credit union, your chances of getting approved can increase significantly. There's also the option of peer-to-peer lending. This is where you borrow money directly from individuals instead of institutions. On these platforms, your story matters. If you can clearly explain your situation and show that you are serious about repayment, investors may be willing to fund your loan even if your credit score is not ideal. However, while exploring these options, you need to be extremely careful. When you have bad credit, you become a target for high-interest lenders and scams. Payday loans, for example, may look like an easy solution, but they come with extremely high fees that can trap you in a cycle of debt. You might solve a short-term problem, but create a long-term financial disaster. So always read the terms carefully and avoid anything that feels too aggressive or unrealistic. Now, here's something very important that most people ignore. Before applying for any loan, take a little time to improve your credit score, even if it's just slightly. You don't need a perfect score. Even a small increase can make a big difference. Start by paying off small debts, making all your payments on time, and reducing your credit card usage. These small actions send a strong signal to lenders that you are becoming financially responsible. Another smart approach is to apply for a smaller loan first. Instead of going for a big amount and getting rejected, start with something manageable. Once you get approved, focus on repaying it on time. This builds trust and improves your credit profile. Over time, you'll find it much easier to get approved for larger amounts at better interest rates. Also, make sure you prepare your documents properly. Even with bad credit, lenders will still want to see proof of income, bank statements, and identification. If you can show consistent income, even from freelancing or side work, it can work in your favor. The more organized and transparent you are, the more confidence you give to the lender. At the end of the day, bad credit is not the end of your financial journey. It's just a temporary situation that can be improved. The key is to be smart, patient, and strategic. Don't rush into bad deals, don't fall for scams, and don't lose hope. There are real opportunities out there. You just need to approach them the right way. Now, I want to ask you something. What's your current credit situation? Are you struggling with a low score, or have you been rejected by lenders recently? Let me know in the comments, because I read every comment and try to guide you based on your situation. If this video helped you understand how to get a loan with bad credit in the USA, make sure to like and subscribe to Loan Wealth Academy. And in the next video, I'll show you how to get instant loan approval online, step by step, so don't miss that.